.7 Light FM. Justin Timberlake is there. Good morning. I am really glad you're here today. Appreciate you joining me each morning. It's 8:39. Time to check in on our money and find out what's going on Wall Street this morning. Good news to end the day yesterday. Today we'll talk about it with Phillip Statler from Statler Financial Services in downtown Sebring, who's on the phone this morning. Phillip, how are you?
Hey, good morning, Dave. Doing well today. It was a split vote yesterday on the markets, and it's reading this morning as we get started.
Absolutely. Yeah, to set the record for the morning, it was the S&P and the NASDAQ slumped a little bit, and they say it was mostly due to the techs again. Talk about volatility. If you like roller coasters, just invest in tech. Broadcom, Tesla, NVIDIA, the tech stocks had a rough day yesterday. The Dow, on the other hand, got to a new record close. We closed yesterday at 41,250 and a half. It was only up 65, but that was enough to get us to a record close. S&P down by 17 and a half. NASDAQ was down by 152. Gosh, if you like roller coasters, tech is a great place to invest, isn't it?
Yeah, I mean, definitely if you like roller coasters. If you don't, then that might not be the best place to be.
Absolutely. I mean, over time, these stocks might have bright futures, but boy, if you're a day trader, it's a good way for a bloodletting. We talk about the economy. I have the final word. I now know that, yes, the economy is absolutely slowing down because yesterday's Texas Manufacturing Outlook Survey, information that you only get out of the great state of Texas, they've got one for the books, and it's the final word. The economy is slowing down because increased demand for sausage over other meats suggests to at least one food manufacturing executive, yes, the economy is slowing down. People, we're in deep trouble. We're buying too much sausage. I mean, there's your final word.
I guess that would be like hot dogs, right? Because they're the lower end of the price of meat, so that's the indicator that things are getting really tough.
Yeah, actually, there is some serious information because, as you say, the processed meats tend toward being less expensive than the regular marbled meats that you buy in the meat department. But I got to kick out there. That's the final word. Yes, the economy is slowing down because people are buying more sausage. Otherwise, yeah, we were talking before we went on. I mean, you found an article that basically kind of brings up a story that we've heard anecdotally from locally as well, that the economy is going great guns. If you listen to the Democrats at their convention last week and you read some of the stuff the Fed's talking about, everything's going great. We can start reducing interest rates because we've done everything we need to do and we've beat inflation. But yeah, there are anecdotal stories floating around, aren't there?
Yeah, there really are, Dave, and that's the thing. I mean, things are slowing down, and the Fed likes that. That's what the Fed wants. However, we forget that it affects us as a community and as a country, that slowing down of the economy. And this article I was reading is, the question was, if everything is so great, why are millions of Americans sleeping in their vehicles? And they say that the number has skyrocketed as the number of people that are actually having to sleep in their vehicles, because as of now, the United States real estate market is the highest priced market it has ever been in the history of the real estate market. So it's pricing so many people out of the market. Even the rental market, people are just it's astronomical what rents are trading for right now.
And the rental property is probably even worse than the purchase run, just on the grounds that, okay, fine, I buy a house at an incredibly inflated rate over what it was just a few years ago. Good if you're the property owner that's on the selling side, but if you're on the buying side and you're going to try to rent it, you've got to make a little bit of profit off of the rental and escrow some money for repairs in that rental property. So, the price of the rent that you're going to charge is going to be, your payment, your escrow, a little overage for profit, and a little allowance for future maintenance needs. And in other words, the rentals are, considerably higher than the payment on the same property would be, and that really shafts over the rental market, doesn't it?
Yeah, it really does. It's it makes it tough. Just bits and pieces of this little article was talking about how it's been reported that some of the flight attendants that work for American Airlines are having to sleep in their cars just because they don't get paid enough to live in the cities in which they have to fly out of.
And legendarily, especially in the major airlines, those are not badly paying jobs.
No, no, they're not.
That's it. It's scary. Yeah, it needs to be remembered when we talk about all these macro numbers. Oh, goody, happy days are here again. The unemployment rate is up to 4.1%, which is roughly where the Fed wanted it to be. The problem is there's a range included, that 4% is the average, but there are people on the bottom end of the range for which the economy slowdown turned into a skid out in the process, and those of us that were fortunate that it didn't really affect all that much. But, the ones that are on the bottom rung that actually had that slowdown turn into a skid, those are the ones that are hurting right now. And the Fed has always had a reputation of both overreacting and underreacting to changes in the economy. And my biggest fear is that in response to stories like that, in response to the fact that the inflation rate is slowing, and in response to the fact that we've overshot the 4% unemployment rate target, we're going to do a 0.5% decrease in the interest rate next month and end up putting the economy back on heroin again and have to go back to the same cycle and slow the economy down again.
Yeah, and that's always a concern, right? Is that how much can they do and really continue to slow the economy and get to the numbers that they're looking for from a Fed standpoint.
And, the rant that I've had for 100 years has always been the fact that we've got this creative tension between the bankers, the Fed, that controls the money supply, one half of the economic management ladder, and Congress that invariably overreacts and overspends in response to it on the fiscal management side of the equation. So they end up fighting each other constantly. We have a tight money syndrome, so consequently Congress passes a bunch of aid bills that adds more money on and prompts us to need to tighten up the money supply more in order to keep inflation under control. And Franklin put it well. It's the best system available, but it's also the worst system available, isn't it?
Yeah, well, that's a good point. It really is. I mean, it's capitalism. It's the whole monetary system. It works until it doesn't work, and then you have to go in and try to figure out what you got to do to fix it. So,
absolutely.
Hey, earlier in COVID, remember RVs were just, you couldn't find one on the lot because everybody wanted to buy one to get off somewhere. Well, they're really in the doldrums now. I mean, they're seeing some of the largest dealerships out there now offering like 55% discounts just to move them off their lots.
So if the van life sounds good to you, this might be the time to consider it.
Yeah, maybe. Of course, the interest rates are kind of high, but if you got cash, it might be the way.
Again, segments, the rolling recession that I think we kind of started the pattern all the way back in the Reagan years. We roll by segments down the line, and I would imagine big ticket items aren't an exception to the rule right now. Yeah, folks can't tell. It's a very slow economic report day today. We're pretty much at the end of earnings season. A lot going on, and all the heavy-duty economic news pretty much is set for mostly Thursday and Friday. Get some mortgage application news tomorrow morning. A little later on this morning, we'll hear about the Conference Board consumer confidence estimate. Beyond that, though, it's a relatively quiet time. So we're kind of talking economic theory. I did catch one thing that I found intriguing. I don't know for sure how to respond to this. Our friends over at Deutsche Bank, the big bank over in Germany, they're telling their investors to buy short on U.S. Treasury bills at the 10-year Treasury bill.
That's interesting.
Yeah, I found it kind of. It sounds like they're expecting interest rates to increase rather than decrease if they're selling short.
Trying to figure out how that's going to work if the Fed lowers interest rates, right?
Yeah, at least one other central bank is figuring we're going to fall on our butts and we're going to end up ending up with higher yields and lower principal prices on that. And I'm not even sure how I had that working in the process. You and I noted that the price of oil suddenly went back up considerably yesterday. It's off a little from yesterday, but still, it evidently was caused by upset and concern over the throwing of rockets back and forth between Hezbollah and the Israelis. Neither one of those two, of course, are part of the oil patch, but at the same time, if it upsets the Arabs, it upsets the oil market, and that was probably the cause of it. Now that things are quieting down, I noticed that our price of oil is at least
coming back down a little bit.
Yeah, a little bit back, farther down to where it was.
Hey, I got
no earnings, I gather.
Well, I got one little one for you. Maybe not little, but it's not one that we deal with here in the United States. It's Trip.com. It's a China-based travel company. It had better than expected second quarter results. And again, you know, they're in the yuan, and it doesn't really make much sense to us. But just take it. They did much better than expected. They're up about 9 1/3% today. And then I want to talk about Apple for a minute, because I saw yesterday that Apple has set out their reveal date for, I think it's September 9th, where they're going to reveal a new iPhone, I think a new watch, and some other things. So be on the lookout for that in a week or so. But right now, Apple's actually trading down a little bit.
Yeah, well, there's a little bit of the word got out too that the Apple Intelligence that's supposed to go with the upgraded Siri, the iOS 18 that's supposed to come with the new Apple iPhone, the intelligence part of it isn't going to come out until version 18.1. That's going to be a month or so after the big reveal. So the investors are saying that Apple is really going to kind of underwhelm with their original reveal of the iPhone 16, because they aren't going to see the fancy pants software until a month or so later.
Ah, gotcha. Okay.
I'm due for an upgrade, so I've been watching that crud. Setting the table again. Up day for the blue chips yesterday. Off day for the broader market because the techs had a bit of a bath. 45 minutes before we open this morning. How are things looking on Wall Street, Phillip?
Right now, we've got red ink kind of across the board. The Dow's down 1/3%, as well as the S&P 500. The NASDAQ 100 is down about 0.4. And the big loser right now, the Russell 2000, down 0.8% before we start trading. On the other side, my other side disappeared, Dave. I don't know what happened to it. I lost my commodities. It just dropped off my screen, so I don't have.
I've got them on I got them on a delayed basis anyway. I've got gold off by about $10 an ounce, down about 0.4% to $25.44.90. Silver is off by 0.14% to $29.96.5 an ounce. And I was alluding to oil. It was bumping its nose on 80 yesterday. It's down a bit from the overnight close and down really considerably from yesterday morning at this time. $76.76 an ounce, or ounce. That would hurt. A barrel for crude oil on the Texas crude market. Yeah, we started selling oil by the ounce, Phillip. Let's just go electric and say screw it, right? That would do it. Our overseas markets, by and large, Japan and the rest of the Asian Rim, basically off. We had the mainland Chinese markets leading the parade, down a full percent this morning. They're still having upset over there. On the European market side, we still got a little bit of red ink. It's a mixed bag. Overall, the European indexes are up on balance by about 0.17% halfway through their trading day. I'd call that basically net flat halfway through the European day. Getting my retirement together is going to take more than I got for my limited time available, Phillip. I need an expert to help me guide my way to a plan I can count on. How do I find you to get that plan going?
Hey, Dave, that's exactly why I developed the Core Retirement Design, to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back with some hard data to discuss as well tomorrow morning about the same time here on Light. I'll see you then. Fair enough?
Fair enough, buddy. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want you to have a great day. Join us again tomorrow for your financial update. Until then, have a great one. Bye now.